In this video, I want to recap and review two different trades that I took on Thursday, October 13th. This was the same day that we had the CPI data and the market aggressively sold off and then rebounded and recovered, had a very, very large rally. We took the market long essentially at the low, and I want to go over the two trades, my thought process behind them, why I took them, my entries, my exits, my stop losses. There's a lot of little gems in here about price and volume analysis that we could put together and improve our trading for future trades that we might take in the future. But before we get into the actual charts, I recommend everyone to follow me on Instagram. I'll post a link in the description below at Entrepreneurship. I post daily trading recaps on here along with very, very good trading tips and tricks that I guarantee you're not going to find anywhere else. The link will be in the description below. You're missing out if you're not following it. But now let's get right into these charts. So the first thing I want to say to gain context is the market, specifically the S&P 500, had a very large rally inside of the supply zone overnight at 3633. And as 8:30 Eastern came around, the CPI data and the jobs numbers came out, the market aggressively sold off, and we did not like this information from this data, the report that came out. The market aggressively sold off. This was also the supply zone, if you were watching my Instagram posts, that we have been watching the past few days that have been rejecting. The day prior, the market was very balanced. And today we broke out of this little balance period and had a very large aggressive market sell-off. This is the type of scenario that I say price precedes news. The market rallies inside of the supply zone. Bad news comes out, obviously the jobs report and CPI data, and then we have a very large aggressive sell-off. Now the market's selling off very aggressively. I haven't seen such a large sell-off. This was 140 points in a 15, 20-minute period. Unreal sell-off to the downside. And everybody woke up this morning. Everybody saw this reaction and immediately was super, super bearish. They were fearing, they were panicking, and they were expecting more downside. Now, when I see this, I always think a red flag goes off in my head, and I always think about these traders. I always say, think like a retail trader, but don't trade like a retail trader. So with this in mind, I couldn't come up with a super detailed pre-market plan. I post my plans every single day in the Discord, setups I'm watching, levels I'm looking out for, and potential trading scenarios. I didn't have a super detailed plan because we were inside of this range from 2020. We didn't have any close key demand zones, and we already aggressively sold off 150 points to the downside that we didn't really have any supply close to price. So when I see this and I don't have any close levels of interest, this is vital for you to understand. I even said today is going to be all about using intraday clues. Act like you have a blank canvas in front of you. Think of the market just being a plain piece of white paper in front of you. We have nothing on there right now. But as the market opens up and as we trade and as we develop, the market is painting its picture to us, right? And as a trader, we got to sit back, and as it's painting that picture, we got to put the pieces to the puzzle together to kind of figure out the picture before it gets painted, because this is going to enable us to get clues to take the market long or short, give us areas of interest, and we could get in before the market actually moves or the picture gets painted. So we had a blank canvas. It's going to be all about using intraday clues. I didn't wake up bullish. I didn't wake up bearish. I was neutral. I want to let the market tell me what to do. I react. I don't predict. If I wake up and say, okay, the market just aggressively sold off 150 points, I'm bearish right away automatically just because we're moving lower. That's trying to predict. That's not reacting. Instead, come up with a blank canvas and react to what the market gives you. On top of this, I told everybody to size down, no reason to swing for home runs. There's going to be volatility. There's going to be large price movements, right? It's all about playing defense. Now, before the market even opened up, I posted to keep an eye on the S&P 500 3530 level. Now, the reason why we were watching this level, if I go to a 1-minute chart, I knew since the market had a very aggressive sell-off to the downside, there were a lot of short sellers, not only from the day prior, not only from 2 weeks ago, a week ago, but also new short sellers from the overnight session and the market was being, when the market opened up, that everybody was fearing, everybody was panicking, everybody was expecting major market sell-off, right? With this in mind, think like a retail trader, but don't trade like one. So we had that line at 3530, and I was interested in scalping long, anticipating shorts need to cover. If I'm a short seller and I got to get out of a very large short position, I have to buy back to cover. If I have to buy back to cover, I'm technically buying, and that could just fuel a further market rally to the upside. On top of that, if I'm stopping out of a short position, if I'm in a late short, now I still have to cover, and that's also going to fuel a further rally higher. So with this in mind, putting myself in the shoes of short sellers, I knew if the market could come up, aka my 3530 level, shorts would have to cover, and I was interested in scalping the market long, anticipating shorts recovering, targeting 3550 and 3570, which are these pink lines over here. On top of all this, I don't use options analysis very much in my trading. The 350 SPY puts were over 33,000 volume traded today and had an open interest of 73,000, along with 349 puts, 348 puts, 370, 347 puts. And if we could compare that to the call side, there wasn't a lot of calls. So there wasn't a lot of people bullish down here, but there were a lot of people bearish. When other people are bearish, I look for ways to be bullish. On top of this option analysis, we also had VIX. If you've seen my last video, if you follow me on Instagram, I was posting about this $33 level the past 2 days. This was for everybody to see. We had resistance at 33 bucks that I said it's very, very hard to expect the market to continue going down if VIX is in this $33 to $35 range. In fact, in the pre-market plan, again, this is just to help you all put the pieces together for my trade. In the pre-market plan, VIX was at 33.35, and despite the sell-off, VIX was not rallying as much as the market was rallying. So that kind of is a red flag that usually VIX will follow the market closely, and for us to not even break the previous high, the weekly high, indicated that something was a little strange, that this downside move on the S&P 500 could not continue if VIX wasn't inflated and VIX wasn't following long because there was such a huge discrepancy. So VIX was at 33 bucks, lots of put option flow. So now we have a lot of things leaning that the market could have a potential reversal here. Now, remember what I said earlier about having a blank canvas? This is what I want everybody to do. I think it's vital, and I think why a lot of traders lose is because they go into the market every day with a bearish or bullish bias, and they go in there trying to predict the next move. Do not predict, instead react. The market's the storyteller, and our job is to, as a trader, is to read the story that the market is trying to tell us using context clues before it tells us it, because this gives us our edge, and this gives us our advantage by knowing something before it actually occurs. And this is vital in the market. I was neither bullish nor bearish, but putting these context clues together, I'm basically reading the story before it presents its information and before we had that very large rally we saw today. I'm not one to ever say to catch a falling knife or play the market long just because we're selling off. And I don't like trying to call bottoms or say, we call the bottom. But we really did catch the low a day today and anticipated a rally. In the intraday commentary tab, this is where I update my thoughts throughout the day. At 9:41, we saw very large short sellers covering their position at 3509 and 3506. It's when the market looked just like this. Now, what this tells me is if 3509 and 3500 could hold here, the scenario from the pre-market plan is going to be validated, and then we could look to take the market long. Now, with the option flow and with the VIX analysis, the cherry on top, and I would not have taken the trade if it wasn't for understanding the tape and understanding shorts covering. Remember, everybody's bearish, everybody's short. On top of everything that I've been saying, if we look at the tape, this is on Bookmap, we see a lot of strange activity down here at 3509, 3506. We see a lot of selling orders come through. We see the market come up very illiquid over here. Then we come up, 1,000 lot buy order comes through. Then we pull back and we see a bunch of bids step in, right? So now maybe shorts are covering here. We don't know if it's a buyer. We don't know if it's a short seller, but the market comes down to this level. Aggressive sell orders come through. This 150 lot order on a 4 tick or 1 point range gets filled his position. All 4 ticks get filled. So now it's safe to say there's either a buyer or there's a short seller that's covering his position. If the market comes up and we start seeing more reaction from other buyers, maybe shorts stopping out, this is just going to fuel a further rally to the upside. So I see all this aggressive market buying coming in, and then I wanted to get long on a pullback if we can pull back into this 3509 range. The market pulls back right into this perfectly, and this is when I get in the market long. Once we start coming up and I start to see more, look at these large prints coming through. 944 when the market looked just like this right here. Pull back into this 3510 level. I'm in long, my stop loss below the low. So I'm in long 3516, stop loss below the low, targeting 3550, 3575. So there's two ways you can look at this trade. I got in early before the 3530 level broke, or I am getting in early. My risk is defined. I'm reacting to what the market's giving me. I'm saying, okay, there's some strange activity here at 35310 or 3509. Let me get in the market long. My risk is defined. I'm seeing something that I like. And now I could get in at a better price. Whereas if I did get long once we broke above 3530, my risk might be skewed a little bit. So now I'm in this trade. The market rallies very aggressively. And now I'm just watching the tape at this point. And there's still very large market aggressive buying coming through. We break above 3530. And if you're watching the market, I'm sure everybody's seen this today. The momentum to the upside was unreal, something that I haven't seen in a very, very long time. And if I get a different reaction in the market, we're going to get a different result. So this is not something that I've seen very often. But as soon as 3530 broke, the momentum just continued moving higher. We broke above it. We actually pulled back and it acted as support. Then at 3550, this was at 10:05 a.m. Eastern. I'm scaling out of my short position here. This is a good area to protect your profits. Do not overexpose yourself. Did I expect the market to rally the way it did today? Absolutely not. Did not expect that. However, you must go with the flows of the market. Do what the chart's telling you. Remain flexible. 1 minute you could be bullish, 1 minute you could be bearish. It's all about what the market is presenting to you. From a volume perspective, that if we could get above 3530, there was not much stopping a rally into 3550, 3575. And this kind of just gave me extra conviction that once we got above this level, the chances of my target hitting and the chances of my analysis being correct about shorts covering was likely. The market could have pulled back here and maybe consolidated a little more in this area right here. And then I would have maybe got out of my position or said that my analysis about shorts covering was probably going to be incorrect. But because we got that reaction out of this level, I knew that my conviction in this setup and the odds of shorts actually covering was very, very large. This is where we saw the shorts covering. This is where we entered the market as it was coming up. We got that pullback down. I really wasn't confident in shorts covering here. But since this pullback held and we started to move up again with more aggressive market buying, this is when I gained confidence in this level, especially when we moved higher with aggressive market buy. And this is what validated that shorts covering thesis. And I said, moving forward, I find it hard to be bearish above 3535. And I would like to see this level hold on a pullback. If true, we could see a move into 3775 and 3790. This is supposed to say 3570 and 3590. But I said we must get past resistance first. So what I saw here was the market basically consolidated. This was at 1035. We moved up, right? We hit our target. This aggressive market sell-off basically is an area of illiquidity. So if we could find value and buyers formulate new demand, we consolidate, we build up volume at higher prices, this is going to indicate that the market could continue higher. Again, this is not hindsight trading. Everything that I'm talking about right now is things that I've said in the Discord at that exact moment. So at 1036, I said it's hard to be bearish at these levels, especially above 3535. If we could hold, we're going to see a move into 3575 and 390. My second trade came at 1037 when the market looked like this. Essentially what I saw was we pulled back, the market tried to rally again, similar to what we saw earlier. I mean, this looks identical, right? The market consolidates, we move up, we pull back, retest this area, and then we move higher. Same thing here. The market comes, consolidates, move up, we come back down, retest this area, and then the market moves higher. And this is when I got long. My stop loss is below this previous low. This was a reduced size trade. I got in when we were flagging near the afternoon session. When the market came up, stop loss below the previous low, targeting 3575, 3590, which is resistance. And the market starts consolidating. We start moving higher, And then again, if you were watching the market today, it's hard to show you what it looks like on a candle chart. There was just so much momentum and so much volume coming into the market that when 3575 hit, there was no reason to sell. I waited for any type of slowing down in the market. 3590 triggered. I waited for a red candle to the downside, and I got out my full position. This was smaller than the first trade, smaller size. Then right after I sold, the market just went parabolic. It's not something you could predict. It's not something that you could even expect. It's something that we haven't seen in a while, but the market was uptrending. I followed my plan. I entered when I had to enter using context clues, and I exited following my target and my plan. I can't sit here and say, okay, I could have just made 50 grand if I held. I followed my plan. The market could have easily reversed on me, similar to the other setup that I talked about in my past recap video. But it was just an unreal day, a day that you have to capitalize on. Do not have FOMO if you missed it. Opportunities like this are slim, but there will be other opportunities in the market because there's going to be some people watching this video and they're going to be like, oh, I missed this move. It sucks. My SPY calls just went up 3,000%. And SPY calls went up a ridiculous amount today. I'm actually going to show you that in a bit. SPY calls went parabolic today, something that we have not seen in a while. But if you didn't catch the move, don't have FOMO. Market's here tomorrow, market's here next week. There will be other opportunities. We don't see these days like this very often, but they occur and they happen. Now, I haven't been trading much of options. I've been really in futures heavily, sizing down, but capitalizing on easier price action using futures and no time decay, especially in the past 2 weeks of market choppiness. So I have been really focusing on futures. However, just to show you the power of options, these SPY calls this morning went from a low of 31 cents to a high of about $7.50. That's a 2,300% return. This is a complete gamble. No one's ever going to catch the biggest move. I just think it's hilarious how options could move in such a manner, yet a lot of people try to catch these moves and end up destroying their accounts. But even if you did get in long when we broke above that resistance level earlier, about 60 cents, and sold when we hit the supply zone, those went up 700%. 60 cents to about $5.20 is a crazy gain using options, but the price action is not going to be as consistent as it would be if you trade futures with no time decay, better tax advantages, and overall cleaner and easier price action. So the lessons I want to give you all here is don't be bullish, don't be bearish, be neutral. Whenever the market tells you be bullish or be bearish, that's when you be bullish or bearish. Go into the market with a blank canvas, especially if you don't have a solid plan or solid levels, don't have a bias. Put clues together of the market, context clues of what it's presenting you. You read the story before the ending comes out, and if we can know the ending before the market reads its ending, then we could get in before the market moves with lower risk, higher odds, and a high quality setup. Leave your emotions out of it. Focus on price and volume. So I hope this video helped. If it did, drop a like, comment if you have any questions, and check out the links in the description below. If you want to get access to the Discord, it is only available for members of the Investor Trade course, which is only a one-time fee. When I'm ending it, peace out.